Good morning and welcome to today's 5 with Fitz. I'm Keith Fitz-Gerald. Thank you as always for spending a few minutes of your valuable time with me. When it comes to the markets, I can only think of two words this morning. How entirely predictable. Well, actually that's three. How entirely predictable. The markets are still on track for monthly gains, at least as I record this, but have gone red in the early going as the shutdown looms. Oh man, oh man, oh man. Lawmakers apparently have until midnight tonight to strike a deal and avoid a government shutdown, but odds aren't good. In fact, U.S. VP Vice President J.D. Vance said yesterday in no uncertain terms that the U.S. is, quote, headed to a shutdown. Prediction markets agree. We've seen this playbook so many times that we can know the lines by heart. Polymarket now puts the odds at 73%, Kalshi at 71%, and some traders are even betting on the probability as high as 86%. But here's the thing, and even if this happens, this is what you really want to think about, right? Profit potential never shuts down, even if Washington does. As always, remember this Keithism or bit of Fitzwitz if you prefer. Chaos creates opportunity, which means that the more the former there is, the more the latter you have. So it's an opportunity. Again, here's my playbook today. Number one, Hertz and Amazon just stuck it to car dealers. This is great. This is a deal I've been anticipating, waiting to see happen for a long time. Didn't know exactly which companies would take it up, but you know what? Here we go. Hertz just teamed up with Amazon to sell cars directly to consumers. Shares of Hertz, of course, have jumped on the news, and for good reason. The rental company resells a couple 100,000 cars a year in the U.S. alone, worth billions of dollars. Now, this deal, and the reason it's important, is it puts every one of those vehicles in front of Amazon's massive audience. That is a problem and a half for traditional car dealers, right? Many folks don't realize it or have never thought about it, but rental fleets like Hertz already buy cars in bulk at huge discounts. And now the company can undercut dealerships even further and do it at scale by pairing with Amazon. Amazon, meanwhile, has been trying to crack the car business for decades. So this is a smart move. And as much as I think Amazon can't get out of its own way in other departments, this is brilliant. It still pales in comparison to Tesla's model, but that's a story for another time. In this case, the deal really works because Hertz provides the wheels while Amazon provides the customer reach, the software, and the financing. Dealers, meanwhile, traditional ones, are left with the worst of both worlds, higher competition and less pricing power. So, trade idea maybe? Long Hertz, which also just completed a $425 million offering to transform itself, or Leaps could also work nicely. So, makes you think anyway. Number two, JP Morgan for the win. News is out this morning that JP Morgan Chase intends to be the world's first fully AI-powered mega bank. Now, we've been talking about this for years here at the 5 with Fitz and in the One Bar Ahead family, and positioned accordingly. The vision is definitely audacious. Every employee with an AI assistant, every back office process automated, and of course, every client interaction handled by or with an AI concierge. Now, Chief Data Analytics Officer Derek Waldron says that the firm is being fundamentally rewired for the AI era. And I agree. Their in-house platform, LLM Suite, taps OpenAI and Anthropic, refreshing every 8 weeks as it ingests more of JP Morgan's massive data pile. Now, Waldron showed CNBC how the system whipped up a perfectly credible NVIDIA pitch deck in 30 seconds flat. Now, that's important because it used to take junior investment bankers hours to do the same thing. And think about this. Now you're talking roughly 250,000 employees are in on it, right? With the next stage being agentic AI, meaning bots that can handle complex multi-step tasks across trading, banking, and risk management. My take on this is that if Team Diamond succeeds, this means more revenue, better margins, and even greater profits. Investors would be very, very smart to pay attention. Investing tip in this one is simple. You buy the best and you ignore the rest. Now, what's the best, right? I get asked that a lot, and I share my thinking with the One Bar Ahead family regularly, along with our latest research, specific stock, buy-sell recommendations, structured portfolio, education, and more. Investors tell me it has changed their lives, and I will be here if you need me. Number 3 today, when pepperoni meets LiDAR. Back in the day, Domino's used to have a 30 minutes or it's free guarantee. And I will be the first to admit that, like many university students in our day, We put that guarantee to the test all the time. Rain, sleet, snow, it didn't matter. More often than not, Domino's got the job done. We got our pizza and things were great. My, how times have changed. DoorDash has just unveiled Dot, a delivery robot that can zip through the streets and sidewalks at 20 miles an hour, carrying up to 30 pounds of food. Think 6 pizza boxes in one run, right? Imagine what we could have done with that back in college. Anyway, Dot is already being tested in Phoenix, complete with 8 cameras, 3 LiDAR sensors, and even a smart scale that checks for missing items. Now, the company says complaints have dropped by as much as 30% during the trials. Ooh, yeah, pass me the pizza, baby. In all seriousness, this is about cost and efficiency, right? Robots don't ask for tips, bathroom breaks, or 401ks. Delivery margins stink no matter what the business is. DoorDash knows it, Uber and Lyft know it, and Amazon's been onto it for years. Whoever cracks autonomous delivery at scale wins big, as do the smart investors who own the companies that'll make that a reality. So is it time to buy these names? Well, I submit, heck yeah, but you got to be very, very choosy, which is why the One Bar Ahead family is already tracking 2 top contenders. Now, that's neither here nor there, right? The point I want to make is that I hope you've got this covered too, or you're at least thinking similarly, and that you've got similar choices, because this is simply too important an investment opportunity to ignore, by the way, right? That's just it. So number 4, don't kid yourself when it comes to Palantir. Oh boy. Team Carp took Palantir public just 5 short years ago. Since then, the stock has returned 1,787.53%, give or take a few pennies or percent between friends, over those 5 years. The SPY, a popular S&P 500 ETF by comparison, has turned in 113.76% over the same time frame. That's still plenty respectable, but you're talking about 1,700% versus 113%? I mean, really? Now, the naysayers have been all but banished to the back 40, and the valuation crowd, well, you know how that's gone. It's too expensive. They said at $10 and at $20 and at $40 and so on. I mean, makes my brain explode. Scores of investors are wondering if it's too late to buy. That's what's really important today. The answer, in my opinion, is no, it's not even close to too late to buy. In fact, the game is just getting started. History shows, in case you're wondering, that there are 10 to 15 Palantirs out there at any given moment in various stages of maturity. So, my point being, contrary to what a lot of folks think about no activity or no opportunity, there's in fact plenty of opportunity for investors. So, here's an investing tip in this department. Companies like Palantir come along once in a blue moon. So it is critically important that you find them early and latch on for the ride. And by the way, get over the fact that you might lose money along the way, right? Because that's true for any stock, even the so-called safe choices that really aren't safe like Wall Street would have you believe, by the way. So ask yourself, what happens if a stock you want to buy does take off like Palantir has? Play to win or you won't win. So people swear up and down. I mean, this is kind of a related point, right? I mean, people swear up and down that sideways that they won't make the same mistake and miss the next Amazon, the next Nvidia, or even the next Palantir. Yet in the same breath, that is exactly what they do. Every stock is risky, but playing to win is how you actually win. By the way, if you're wondering what Palantir does, you're not alone. It's not the proverbial boogeyman like any number of folks believe or would want you to believe. And I gave a quick and dirty explanation, the video to which is elsewhere on this channel, and you can watch it by clicking on the link in the written version of the 5 Fits today. I hope you do, because this is a company that is still early days. And finally, number 5, back to the shutdown. I mean, this just kills me, right? We're headed into this thing. So I penned a short, sweet letter that I think sums it up. Maybe it does, maybe it doesn't, but it's just me and it's how I feel. So here we go. Dear Congress, playing chicken at the expense of the very people you serve is reckless, irresponsible, and childish. So get your asteroids back in Washington, lock the doors, and don't come out until you have a deal. Meanwhile, and for every day you don't, I submit you get no pay, no perks, and no pension. Stop the grandstanding. It doesn't matter what side of the aisle you're on. The American people you serve deserve better than that. Enough said. Today's bottom line, many people long for the past, but the real beauty is inherent in what's to come. So is the profit potential, especially when it comes to the financial markets. There are trillions of dollars on the move, and I can't understate what that's going to look like for your future and your wealth a few years on. So, importantly, make sure that you and your money are on the move too. As always, let's make it a great day. You got this, I promise. And I will see you tomorrow. Thanks for watching. Cheers.